The longer we ignore a problem, the bigger it gets. But will tax cuts be the solution amongst record debt levels in the US and Western economies? Also, with Roaring Kitty's return, $3 billion was lost by short sellers as squeezes came up across the board. Will there be opportunities on other things similar to 2021? In today's video, we take a look at those together. The US 500 also finds itself at a point of resistance ahead of inflation numbers. With advances improving, breadth looking better, but still two rejections, could the sellers be at certain points? And also, what's going on with yield inversion? We've got the average until a recession generally occurs. That, along with some of the best opportunities on the markets right now, including US oil at one of our favorite zones, is coming up in today's show. Join us as we cover stocks, commodities, and cryptos right now. Well, welcome back everybody to The Daily Show. My name's Tom, and as always, we'll be going through the macro, the data, the leading indicators, and the hottest charts together. If it's your first time here and you've ever been left scratching your head saying, why did that just happen? Remember to subscribe and smash that bell icon as we bring simplicity to the complicated markets and more importantly, show you where the largest money flow is moving around the world. So let's begin with the biggest story at the moment, which is of course inversion and when recessions tend to start. Now, no one wants to talk about recessions right now because, of course, that was more 2022-23. But actually, if you look at days from first inversion to start of recession, you might notice that we're at 561 right now, and that usually on average it takes 589 days. Now, you might be left thinking, wow, it's going to be like 2, 3, 4 weeks away and we're going to see a recession. But I don't think it's like this, the normal ones. I think it's more like these ones over here. And the longer this goes on, remember, the worse it's going to be when eventually we do go into recession. And you'll notice that governments around the world are kind of doing whatever they can to keep this thing going for as long as possible. So I wouldn't doubt the fact that we could go at least into the 800 to 900 days when it comes to inversion of yield curve. And at this point, that kind of goes towards the late end of 2025 into 2026. A very important time in markets. So is it worth being bullish right now? Well, there are some signs of yes, but just here is another reason why 2026 is going to get a little bit nasty. The S&P 500 companies are restructuring their own debts over the next 5 years. And you can see here that they're doing it probably crescendoing around 2026. But it's this black one that I want to look at, the Russell 2000. 37% of businesses within the Russell 2000 make no money. Are they going to have a big problem if we continue to have inflation, we continue to have tax cuts, which end up causing more inflation, all of these types of things? Well, I would say yes. So it's another pointing signature towards potentially having problems at that time. Let's jump back now, though, to where we are in the current markets, because, of course, everyone's discussing the GameStop saga as short sellers probably lost around $3 billion on Monday's monster rally as Roaring Kitty came back on to social media. This time he's on X. So is that going to open up a 2021 similar situation? Well, here are the most shorted overall squeezed stock targets. And you can see here that a lot of them have a lot of short float interest. And people will now start to look at these over the next coming days and weeks. As we saw in 2021, it ended up expanding throughout so many stocks. It wasn't just GameStop and AMC. We also had Virgin Galactic, Nokia, and so many others that ended up going into squeeze territory. So it's going to be an interesting time, but just remember, whenever you look at those, they are gambles and you need to think about your risk management. I said this on our live stream, which we do every Monday here on the channel, so subscribe for that. And I had plenty of stories being thrown at us where people, unfortunately, were being left holding the bags based on they're just trying to get in and out and enter some profit. There are better ways, I believe, making money and profit in markets than going and gambling on those stocks. But we will look at GameStop later on in today's video. So what about the percentage of GDP changes? Well, Goldman Sachs obviously sees the US doing okay. And in fact, they think it's stabilizing at this point. So Goldman's got a pretty peachy look at the US economy. We also noticed that while maybe the Federal Reserve is going to have to keep interest rates at higher levels, in general, other countries around the world are actually using easing policies. So the UK in particular dropping and easing their policies substantially recently. And of course, this is going to lead into what you would only assume is probably further inflation possibilities over the next couple of years, as most governments, especially in the West, basically point towards tax cuts as being solutions for the inherent cost of living crisis. And we know that is more of a stopgap, which ends up causing more inflation and ends up causing a bigger problem on the horizon. So, earnings surprise, is that looking good? Well, it is. And this earnings season has been kind of as expected, pretty good across the board, leading to the bulls having a nice pickup after that little correction we saw between 5 and 6% in the S&P 500. One of the more surprising stocks I thought was Hood. And I thought I'd mention this because we'll look at the chart later on. And Hood actually started turning a pretty nice profit. And as is typical with the IPOs, usually an IPO comes out, gets crushed, forms a base somewhere around here, and then starts to rise back up. And it certainly did rise, and now it's actually dropping after a very good earnings report. Could there be some opportunities on the horizon for that? We'll look at that a little bit later on as well. So where are we in terms of the cycle? Well, let's talk at election years first. And most of you who've been watching this video would know this chart. And obviously I'm talking about election years from the correlations with previous periods. And we're most correlated with 76 and 2012 at this point. Generally speaking, we hit kind of a high here. We often do see a double dip into March and June, and then we see a rally. Now, current price action would dictate that we are in mostly a bullish trend in what we call a positive gamma environment. But if the markets do sell off here after inflation numbers, we have to expect a bottoming in May into June. And then, of course, we would expect a rally from that point. Also, if you're an investor, if you're someone that's looking at a longer term kind of history, you would notice that we are not even near the median duration of a bull market cycle. So generally a cycle starts, which did in September of 2022, and it runs for quite a long period of time. In fact, 31 to 33 months on general, and that's not even close. Now you may notice that that takes us into kind of like 2025, and if we keep running for a little bit, we might be entering into 2026. So effectively, we've got kind of like, a couple of years here, or at least a year and a half, where you kind of have to expect, due to political things and other stuff that's going on in the world, that we could continue to actually see rallies in these markets. Of course, you wouldn't be looking at lead indicators, but they are there. One of the biggest problems is going to be from a longer term investor realizing that at these prices, at these forward PEs and PE levels, that the forward gains over a 10-year period actually are not that favorable for the S&P 500. And what that's starting to tell you is that there will be a cheaper price on the horizon, whether that's 3 years away, whether that's 5 years away, there's going to be a cheaper price on the horizon. And obviously Warren Buffett recently has been upping his overall cash holdings. I think it's sitting about 21% right now of the overall market cap of his fund with cash. And he's looking for that opportunity on the horizon. The problem is Buffett often has a much longer time horizon than most people. Now, of course, he doesn't have that time horizon anymore, unfortunately, but what his fund does is usually those types of things. So Wayne's also come out with some stats, and he's had a look at it, and he said, okay, well, you know what? We got a 13 up, 0 down chance here for the NASDAQ with comparable data, where we saw an April 30th to May 11th up at least 2%. Now, that's exactly what we did see, and it kind of suggests that markets might continue to squeeze higher. So this will be an important time to be looking at the options, which we'll do in just a moment, and make sure that we continue to be in a positive gamma situation. In terms of money flow, where the money is going, well, one of our favorite sectors that's starting to up and come is, of course, the solar sector. That was up 1.69%. That's going to be a lot of volatility, though, leading into the CPI number this week. And the over 5 days, we've still got some of our favorites, utilities, gold, and a few others. Notably, there's a bit of defensive markets coming into the CPI, performing the best over the last 5 days, though. So let's now jump on over to the S&P 500. What's it doing? Well, the S&P 500 has the advanced decline line improving. So this basically tells you that the overall breadth of the market is actually still pretty good. We're at a resistance, and we seem to be stuck within this zone. Now, if we move over to the futures, it becomes more clear. We're getting a little exhausted at these highs, and we're starting to see rejection wicks. Now, they were happening at that 52 kind of 25 zone, and we kept closing underneath those, which is basically to do with zero DTEs. If we closed above 52.25, we were going to be pushing that positive gamma situation, which was going to squeeze, you would think, to 5,300. That's now moved to 52.50. So basically, where all of the calls sit as of the next couple of days is sitting right at 52.50. Where do the bears sit? Well, I think it's pretty clear that they're underneath this structure in here. So from a TA perspective, a close below 51.60 should expose bears to being in control of the smaller timeframes. And for buyers or bulls, you're looking around the CPI and PPI numbers coming out in 24 hours to see buyers recommence around this wall area of 51.85 to 51.90. This is going to be where the most amount of bulls are going to sit. So basically, if the markets go like this, there could be a spike. If we push above this level here, we're probably going to squeeze to a new high, 5,300 being the next target. If we manage to push below this level, I think rallies would be met by sell demand and we could go a little bit lower. So a lot at stake here over the next 24 hours. And in particular, yes, the trend's still up, but I think we've got some of the clearest levels right now. Here's another way to explain the clearest levels. 0DTE is becoming such a huge part of the market. They're now taking over 50% of the options market, I believe, if not even bigger, which is a huge deal. And you'll notice the 5250 has become the biggest strike. So that's going to be where you push towards that 5300, which just so happens to be the OPEX call resistance, which is basically where trillions of dollars of options expire, and that's happening at the end of this week. Notice as well on the 15th, which is CPI day, we get a lot of 5280s. So at the moment, the market is kind of spiking towards it. I mentioned 5160 before. Notice where the puts are on CPI day. They're sitting right there. So that's the put wall. This is the call wall. We're going to be probably trapped within that zone. A breakout either way is going to start exposing that huge gamma switch move. Now let's have a look at what the CTAs are doing. So they're stabilized in S&P contracts. They're stabilized on NASDAQ. They haven't really been buying or selling in huge quantities. And Brent continues to find a little bit of weakness. But as we've talked about several times before, and you can see here, it's usually 1 or 2 days behind in price action. Ultimately, we're pretty bullish on Brent, and I'll show you why in just a few moments. So JP Morgan's game plan of CPI day, they're pretty negative, guys. 40% of probability that the S&P 500 is actually going to be down. Now, I'll say that this is usually not correct, but they believe it's going to be between 0.3 and 0.35 or 0.35 and 0.4, and this is how the S&P 500 is going to be affected. Something you could keep in the back of your mind if you're interested. So let's take a look at Warren Buffett's investments because, of course, he's holding 21% cash. Is this unusual? The answer is no. You've got to put things back into perspective. Warren Buffett's holding around the same amount of cash as he usually does. If this starts to expand, which I would expect it to do over the next 2 to 3 years, as he's getting pretty good money in cash for what he's doing, then we're more than likely going to go up into those 25 and 30% cash holdings. When that happens, you also need to start thinking, wow, we could be concerned. Are we concerned about markets? No. US financials making new highs here. European financials going bonkers. What does this tell us? It tells us that everyone is borrowing and debt is starting to balloon. And of course, this will eventually be a big issue, but it's important to follow the financials. And at the moment, they're showing expansion across the board. You can also see nobody wants protection right now. The VVIX, the volatility of the VIX itself, is down near those lows. And that's telling you again that no one really thinks that there's any problems on the horizon. So the good times keep rolling for now. So let's take a quick look at breadth. Breadth's been improving across the board. You'll notice here that we've now seen less new lows on small caps in particular. They're leading up. We've also got mid caps doing very well and going from pretty negative to very positive. And that's across the market. So basically breadth has been improving, showing that pullbacks should be met by bull demand. Bull market behavior checklists looking a lot better across the board, and moving average direction dashboards looking better as well. Utilities at 100, financials at 77. We talked about this in our weekend video about late cycle investing, and those are some of the ones that we do expect to do pretty well. With Tuesday's kickoff, we've got Barber SE coming out for Asia, obviously seeing whether they're improving. We kind of feel like China's really been turning it around. So I'm not sure if Barber's going to be the leader of that, but in general, those stocks have been doing very, very nicely. And there are many others coming out this week. Just remember, use your options market, such as this chart does here from Earnings Watcher, to show the volatility and what's expected. Barber's going to move plus minus 8 according to options. Rumble's going to be plus minus 9.5. There's some big moves this week. So just remember that that is always a consideration when you're looking at charts. Now let's jump on over to home builders. So some lead indicators here in the charts. Home builders down a little bit, still kind of clawing its way back up though. That's generally positive for markets. KRE, regional banks, took a new high, didn't stick it, so they didn't close above, but that's pretty good. And financials in the US topped in. So that basically means they hit the resistance and they started showing a little bit of signs of weakness. We're looking for breakouts above here. So what I'm going to do is I'm going to set an alert here. And if that happens, then of course, I believe the bulls are in fairly decent control of these markets. So continue to watch the financials. It's going to be important. Let's now jump into some other things. We've got the VIX here dropping down to 12, jumping up. You would expect this. Basically, the VIX is always going to increase ahead of PPI and CPI days. The more important one is going to be the volatility of the VIX, which is the VVIX. And you'll notice here, while it jumped up a little bit, still historically very, very low for now. Also, what about the bonds market? Well, the bonds market and the options of the bonds market did see some increase that dropped over the last 24 hours. Again, it's a little bit of an uptick, so you can start to say, well, maybe I'll be looking for those bear kind of bites on the S&P 500, but it's not enough to write home about yet. Something we're watching very, very closely. Central bank liquidity continues to flatline, so no movements there on central bank liquidity. The US dollar did start to drop, obviously raised back up a little bit, and it hit one of our perfect levels last week, a massive smashing of where we expected the US dollar to start to weaken. So we'd like to see the US dollar probably find further weakness around here. I'd say it's waiting for the PPI and the CPI results, so we'll see how that ends up playing. But in general, if it does bounce through here, it might be moving up a little bit, maybe like this. And if it does manage to get through this supply high, then the US dollar probably will start to squeeze pretty well. I think a lot of people are trying to short it in here, and I wouldn't disagree with them with the current evidence we have at hand. We'll see how the CPI result figures it out. Gold looking pretty bullish, looking nice, broke through our high, pulled back. I'd like to see it pull back a bit more to 23.20. Maybe that'll happen during CPI or PPI. Love to see a nice buy off that level though. Same with silver. Silver actually being stronger than gold, which is what we suspected, finding a very small pullback and at the moment looking kind of bullish. And that brings us to silver gold ratio, which is still improving, 0.012. We still expect it to go to 0.015 in the future, with silver starting to outperform gold. So let's now talk about US oil, and so far so good for what we've been discussing over several days. We hit our great bull zone. We found initially some buyers, which of course we like to see, and we've since tested the same point. CPI and PPI will be the ultimate decider for this, but we're looking for $80 plus a barrel, and it does look like it wants to kind of look towards that figure. One of the better technical charts, I would say, over the recent weeks. Now let's move over to some single stocks, and then we'll look at indices. Tesla to begin with here. You can see the rejection off that 176 zone. 176, something you will want to have an alert in the future. And if Tesla does want to continue down, I could see it as low as 161, 162, hit the 61.8 of where it rallied through, and that would be the secondary buy zone. Basically, we've kind of maintained that these two levels are where we see Tesla bulls re-entering back into the market. What about GameStop? Well, GameStop was up a lot. It ended up hitting almost close into $40, stopping at around 38 and rejecting back. I would say that this is probably going to now be here on and off for weeks, if not months. So basically what's going to happen is it's going to boom, it's going to bust, it's going to boom, similar to previous times. And the real key is going to be there in the sleeper before it booms again. Now with Roaring Kitty's return, that means that at any point that could particularly happen. He obviously has a huge impact on Wall Street Bets and some of the other websites out there. So look, squeezes are back. It does mean that short float stocks may be worth looking at. And of course, we did watch a few of those before on the charts. What about Hood? Well, good return, good earnings, but poor result afterwards. Now, that could be because the stock actually increased from basically 100% into the earnings, like up from $10 all the way through. So that's partly the reason, but I do think that Hood may be going like underneath this zone right now. Maybe it sells into the 1560s. I am positive on Hood. I just need it to be at the right prices. So of course, the initial reaction quite negative. Maybe we go a little bit lower first. But do you like Hood? Let us know in the comments down below. It's starting to look a little bit better. Emerging markets. This has been one we've discussed now for about 2 to 3 weeks. Finally starting to see some breakout here for emerging markets, and it's around the time that we would expect it to occur. This will be something we focus on in coming weeks, so definitely stick around the channel. But for now, it's just temporarily, we're looking at those weekly closes to be most important. German DAX, now onto the major indices. DAX certainly at a new all-time high, thanks mostly to financials in Europe breaking out. Obviously, this is not a sector or an area that I'd want to be in too much longer. I think it's doing very, very nicely for late cycle investing, but it does have some serious concerns on the horizon. So at the moment, it's had a nice move up. Sitting here, it's probably going to consolidate for a little period after that initial run. Same thing for the Chinese stocks. It got close to 20,000, obviously hitting 19,200. It's been an amazing, amazing run. We still think there's more potential on this. And as we start to see Chinese stocks come out with earnings, we'll see whether they can continue the run up. But for now, it looks like China's back. Obviously, everyone's discussing it, but it's only early days people discussing it. We were probably one of the first channels to really talk about it 2 to 3 months ago in any great length, and we've been, of course, discussing that one. Aussie 200 time, similar to the UK, it's finances energy, metals, and minerals. So this is one of those market sectors that as long as you've got inflation around, it probably will continue to do quite nicely. And I expect the Aussie 200 to possibly perform into the 9,000 over the next 1.5 years. For this point, though, we've got a defended 7,500, and we're kind of just trading around that 61.8. So waiting for the US 500 and CPI, I would say on that one. Similar for the US 2K. Can it get through the bear zone? No. That's 2084. We had that level there before. We still are making a series of higher lows, so no concerns just yet. But I would be watching the US 500 for both of these markets, whether you're looking at the NASDAQ or the Russell. I think the S&P has the best levels. So remember that 5160 area, 5160, 5180, where the bulls sit on the pullback. And right now, really where the bears have to control the market. If we get through 5250, we're probably pushing a 5300 this week. And that's also going to push Russell 2000 through that high. And of course, the NASDAQ to potentially a new all-time high. I've got to watch reaction here level just in case we hit that during CPI and reject off it. But for now, we are in a positive gamma environment. Similar to Bitcoin, if we have a look at this market, it bounced off just above 60K and then rallied straight back up to the 63.5, finding resistance at the same level. We're looking for this to actually break on through and obviously then find further strength. If we do end up taking 60,000 and we close below, that could be a negative. But I would say that in general, the trend is up for now on Bitcoin. And of course, 67.2, if we manage to make a higher high from that point, the current downward daily action, which is a series of lower lows and lower highs, would be broken in terms of sequence. So for bulls, you're really hoping to break through 63.6, 63.5 over the next 24 hours, push towards 67, break that, and then maybe look towards all new time highs. PPI on Tuesday, guys, 8:30 a.m. New York, and then of course CPI, 8:30 a.m. New York, along with core retail sales. Watch all of that stuff. If you enjoyed today's video, remember to subscribe, smash that bell icon, and follow us on some of the socials as well. If you're interested in some of the charts that we prepared for today, you can check them out on X. And if you're interested in how we read markets, how we kind of better understand things, then you can check out our flash sale on some of our courses. Thanks so much, everyone. We'll see you in the next video. Bye for now.